Welcome to the second of our global silver market wraps, where we are tracking the most important metal on Earth right now. And what was cool 5,000 years ago is cool again, and soon to be even cooler. And with that, let's discuss what happened behind last week's narrow trading range from Monday, April 27th through Friday, May 1st. This week in silver didn't just move price, it reset the market. Because if you look at the start and the end, 75.57 to 76.71, you'd think this was just another quiet grind higher, but it wasn't. It was a whipsaw, a flush, and then a very deliberate reaccumulation by stronger hands. And you can clearly see it if you follow the flow across Asia, London, and New York. So let's walk through it the way a desk would. We start Monday, April 27th. Silver closes at 75.57, and on the surface, everything looks fine, but underneath that price, there's no urgency. On the SGE, or Shanghai Gold Exchange, demand is steady, but not aggressive. In London, through the London Bullion Market Association, the auction clears cleanly, no stress, no imbalance, and on the CME Group, volume doesn't confirm the strength. So Monday isn't a breakout, it is a setup. A market that looks strong, but is not being chased. And then Tuesday hits, April 28th. Silver drops and closes at 73.75. Now this feels different. It feels like maybe something broke a little bit, but listen carefully to what actually happened. The selling comes in, yes, but it's not chaotic. Liquidity just steps back. In Asia, buyers don't defend. In London, offers start to stack. And in New York, you get those systematic sell programs pushing price through obvious levels. Stops got triggered, price accelerated lower. But here's the tell. Open interest didn't collapse, it holds, and it even ticks slightly higher, which means this wasn't panic. It was pressure. Positions are changing hands and not disappearing. And that leads directly into Wednesday, April 29th. Silver closes at 72.36. This is the low of the week. And this is where most people got it wrong, because it looks like a breakdown. It feels like a breakdown, but structurally, it's something else entirely. On the SGE, physical demand quietly stabilized. Not aggressive, but it's there. In London, the market softened early, but into the fix, buyers begin to show up. And on COMEX, volume spiked. Stops cascaded, and weak longs got flushed out. And this is the moment where the market reset. This is where ownership transferred from weak hands to strong ones. Because again, open interest didn't collapse. It held, meaning someone is absorbing all of that selling. So now on to Thursday, April 30th. Silver rebounded, closing at 74.30. Not a spike, not a panic reversal, a controlled move higher. And in Asia, the bids came back. Dips started getting bought, and in London, offers thinned out. The market cleared higher and more easily. And in New York, buying came in waves, structured, deliberate, but something changed. Price rose, and open interest rose with it. And that is your signal. That is not short covering. That is new longs entering the market. And then Friday, May 1st, silver closed at 76.71. Not just higher, it's a statement. Across all three markets, the tone shifted. On the SGE, higher prices are accepted. In London, at the LBMA, the auction cleared without resistance. In the CME Group, buying continued into the close. And here's the key difference from earlier in the week. There are no sellers stepping in, no wall of supply, just air above price. So what actually happened this past week? Early in the week, macro pressure built. The dollar was firm, yields drifted higher, and that created stress. Liquidity pulled back. Weak hands got forced out. Then midweek, something shifted. The dollar started to soften. Real yields began to roll. And that mattered more than anything, because silver doesn't trade on price, it trades on real rates. And as yields fall, the pressure lifts. At the same time, industrial demand did not collapse, broader commodities stabilized, and so now you had less macro pressure, stable physical demand, and a market that just flushed out weak positioning. That's fuel. So by Thursday and Friday, the conditions were there. New long stepped in, dealers adjusted, positions flipped, the market moved higher and cleanly. And now, here's the most important part. Price ended the week higher, but more importantly, open interest expanded across the entire market into weakness and into strength. And that tells you one thing. That wasn't noise. That was positioning. So what does that mean going into May 4th through May 8th? It means the market has already made its decision, and now it's a question of follow-through. If silver holds above 75.50, 76 area, you're going to see continuation. Momentum funds come back in, dealers stay supportive, and the path open towards 78, maybe even 80. But if that level fails, if we drop below 75, then you're going to see a fast reaction, because those new longs, they're not committed yet, and they'll exit quickly. And that brings us right back into the mid-70s, maybe even the low 73s. So this week wasn't random. It was a transfer of control from weak hands to stronger ones. And now the question isn't where silver goes, it's whether those new buyers are ready to defend it. And now you know the rest of the story for what we are looking for silver to do this week. Build that stack. iBankerU. Good day